Hi there. Let's have a look at bot trading in the crypto market as it becomes more and more famous among retail traders. I myself have actually built and used many bots operating in the Forex market, and there is clear upsides to bot trading, such as that it takes out the emotions out of trading, 100% availability at all times, and that the strategies are easily backtestable. Yet, a lot of traders underperform or are even losing money with bot trading. So today we're going to have a look at a very important, maybe even the most important input variable to bot trading. The problem is a lot of people are not even considering this variable in their trading strategies. I'll walk you through it by looking at 3 example bots and their performance. Alright, this is our 3 bot settings. They're all running on a 50k USD balance account. We have different trading frequencies between 1 to 10 trades a day, different risk management settings, order types and products traded. As a first step, let's have a look at how much profit the bots have to make in order to break even on exchange fees. And no, I'm sorry, but there are no bots that consistently make you thousands of % per year in return. Those just do not exist. Everyone would be a billionaire in no time, and even if they do, the last thing that people would do is publish them and increase the risk of being front run. Chasing bots showing incredible returns is probably one of the most riskiest thing traders can do. So, how much return is needed to break even on fees, first of all? While the fee levels at your exchanges look like very small percentage numbers, we can see that those fees add up to very large numbers. You may pay 133k US dollar fees for running the first bot, 72,000 for the second, and 20.3 thousand for the third, which represents a necessary return of 265, 143 and 41% for these 3 bots just to break even. This is what you pay if you trade the bots at exchanges not optimized for the specific bot strategy. If you optimize the exchange for the specific bot, you can reduce those fees a lot. Compared to Forex, which I mostly traded in the past, fees in crypto trading are still very high in general though. A standard lot round turn in Euro US dollar, so 100k US dollar buy and sell, costs you like 5 to 10 bucks in spread and commission. While in crypto trading, with a taker fee of 0.06%, it costs you 120 US dollar. Fees at crypto exchange differ extremely though, and they differ especially depending on how much volume, whether having market or limit orders, how much balance you have on the account, and so on. In an optimized exchange setting, you could reduce the fees for those 3 bots to 39k, 24.4k and 6.8k. I will show you an easy way to find the ideal setting for your bot later. That actually only takes a few minutes, but let's quickly have a look at one more thing first. The anticipated return of your fee optimization is not only the difference in percentage here of 265 and 78%, but those savings in every trade compounded over time. Compounding is one of the greatest things in finance and trading, so let's have a quick example of what that would mean for the 3 bots. Let's assume you've had the bot running in a non-optimized scenario and it made an overall break-even performance. If we now assume the fee difference in an optimized scenario becomes our profit per trade and we keep all the other input variables the same, the first bot would actually make you an annual performance of 550%. I mean, this is just simple math, no rocket science. I'm only compounding the profits over the course of 1 year for the specific bot setting. I hope you understand now why I said in the beginning of the video that the fee setting might actually be the most important input variable for bot trading. The absolute effect in fee difference is already big and can easily make the difference between a profitable and a non-profitable bot. The compounded effect is even bigger though. Alright, so as promised, I'm going to show you now how to actually optimize your bot fee setting. As said, there are hundreds of different tier levels with much more tier requirements and different fee levels in each tier at the largest crypto exchanges. This makes a manual optimization pretty much impossible. So what we can do is head over to Dr. Fee, where we can just type in the monthly spot and futures volume, the amount of maker and taker percentage, the balance on the account, the holding of the native exchange token we would be willing to hold, and so on. We just click next. Let's skip the email part here, and we directly see how much in fees the bot would create at the different largest crypto exchanges. This is actually the scenario of our first bot earlier. We can see that the absolute fees at each exchange, select additional exchanges here, and also scroll down to see more info and get a link to all the details of the specific exchange. It's pretty easy and straightforward and shouldn't take more than 2 to 3 minutes for the whole process. If you have the bot running already, you can actually also just connect that exchange account through a read-only API. And all the input factors which we typed in earlier are read in the trading history, and the report is generated automatically. If you don't know your volume or your maker-taker share or so, that makes it easier. Okay, let's slowly wrap up. The bottom line is an optimized fee setting for your bot can make a huge difference in your profitability. And there is really no way to say which exchange is the best to trade at, because it differs for each bot, the volume you're trading with, and so on. When trading with bots, or actually also copy trading, you should always have a look that the provider allows you to choose different exchanges, such as 3Commas, Shrimpy, and CoinRule, so that you can optimize your setup. I will put you the link to the providers with a variety of integrated exchanges in the comments of this video. Many exchanges themselves are also offering basic bots, which you can combine for your trading, so you can choose the exchange which fits you best there. And yeah, if you're running the bot on your own server, you can freely choose the exchange anyways. One crucial aspect for the bot fees is the share of market versus limit orders. If not required for your bot to execute as market order, you may be able to significantly increase its performance if increasing the share of limit orders. Retail traders in Forex usually have the same fee levels for market and limit orders. But in crypto trading, it's very different, with market orders many times more expensive compared to limit orders at the majority of the exchanges. Alright, if you think that was helpful and actually can have a tangible effect on your trading performance, please leave us a like and subscribe our channel. We are developing many more analysis in the weeks and months to come. So stay safe and happy trading!
Please be aware that we at Dr. Fee are no financial advisor. This video is for entertainment purpose only.